assuming I've got a divergence creeping into the other lines, and assuming that the purple line is slowing right down to a snail's pace. So I want to see that divergence. I want to see, for example, the lightest blue line diverging from the yellow line and all the way through these ribbon type value lines. You don't need all the value lines. You don't need the red one, for example, in the middle, but I like to see the value coming from those ribbons, because the more we see the ribbon forming, the better the opportunity for us to deal. So in an area, for example, and I don't want to go back all the way to this trade here, but this was obviously the London into the London Open. You can see a big buy trade. You can see some sellable opportunities up here. And that sellable opportunity continued all the way through the morning session. But if I look at the value on this, we can see that the purple line turns. Remember, when the market starts selling, the purple line floor will start rising. So for example, when I see the purple line starting to rise here, I can see I've got a brilliant fadeable opportunity at the top edge. That's going to be a great opportunity for me to sell into that as a storyline right there. And obviously that got me into the markets just ahead of the cash open on a short trade. When I get that trade there at 42s, I've traded all the way down to 14s. I've made myself 30 points. I've made myself $1,500 of profit on that bit of short business, which is pretty good. Ready to rock and roll, right? Ready to rock and roll. We should be in reasonable shape at this stage. So this is something that we want to try and make sense of. This is something we want to try and get our heads around. And obviously it's up to us to now go ahead and figure out the structure in these areas. Similar, we can see that the purple line turned here, and therefore pretty much anything to the right hand side of that purple line turning gives me an opportunity to start dealing in this area. And likewise, the purple line didn't turn until we really got that sell-off coming away from those. But we can take advantage of these areas now in terms of market structure. Now obviously into the cash open, you can see it just becomes one big huge mess. You can see the purple line is rising, so I'm probably going to be wanting to try and buy a bottom edge somewhere. So let's try and find, first of all, the sell. Now what I'll do actually is I'll take a naked structural chart on the S&P so that when we're looking at the sell, these lines are not getting in our way. Okay, so the sell I'm looking for is this sell here at 41. So what we want to do is we want to get back into the structure of this as a storyline. To do that, it's always good to go backwards a little bit. This is the same chart. This is the same chart. It's always good to go back a little bit to try and find the best structures. Now, some of the best indicators we can use in terms of market structure are things like PVT. If we use PVT, we can start to see toxic order flow without really having to spend too much time looking for it. Well, we can see where the toxic order flow came in. The selling and the toxic selling came in here. We got a reversal here, which gave us what looks like a bottom edge. Now, these PVTs are very useful when we're talking about Wyckoff. I think they're probably better than your Weiss waves and all of those kind of things, but it is what it is. So we know that the toxic selling came in where? It came in here. So where's the top of that bracket? Well, the top of that bracket is this price here. So it's good to go back to that toxic selling, find the high of the bracket, and mark the level. Okay, so when we've done that, we can obviously think about that idea as when that became a sell, which level got taken out? Well, this level here got taken out quite nicely. So we obviously can see that this is in a sell trend from here. And obviously from that point onwards, you can see there was a failed auction, which gave you the sell trade in here for the tipping point in the BSG squeeze. There's the sell trade, which created the toxic behavior. As we go down into lower prices, we can see that we made a low price here and we rallied, which puts in a double trade level here. Yes, the double trade is when the trade structure changes. When we make a new drop, that's when that level gets put in, because we don't know it exists until it does drop. So that's where that level gets put in. Now we've got a bottom edge because the price has rallied. Once the price rallies, we put in that bottom edge. Have we got any strong closes below the bottom edge? No. So we can obviously start to recognize that this is probably now the dealer's bracket right here. This is the market maker's range here. Would you all agree with that story? Absolutely. So this is the market maker's range. We know that if the price goes above this level here, it'll probably turn into a... Now some people might say, but surely that you would have used this as a close below the bottom edge. Yeah, well, let's take a look at the Wyckoff structure to that close. Let's check out the volumes. The volume is actually declining into that bottom edge, not increasing. If the volume was increasing into this bottom edge, I'd probably agree with you that I would use that close for a new bottom edge, but I don't agree with you because the volume is actually declining. So we can see that there is this very large volume structure here, which means that that increasing volume phase there is the one that we're really, really excited about. We've got a commercial bracket. This volume is a continuation, but it also slows the price right down to a snail's pace. Now this is a volume reversal. Lower volume in the down candle, higher volume in the markup. So you've now got your first point that you can argue, your first real point that you can argue that this is a sign of strength. The volume is now increasing. This is now a sign of strength off the bottom edge. This is what you now call a low volume test. We get a spike in volume. We've got to be a little bit careful, but we get a spike in volume there. And the only reason we get a spike in volume is, of course, because we get a little spring just at that same point. There's a test. It's a relatively high volume test, but you need to get a lean against that. You certainly can't fade it, but you can buy it if the price gets jammed. You can buy this as a Heisman. You can buy this as a reversal candle. You can a tipping point, and you can buy this as a BSG squeeze because that volume has indeed reversed. The tipping point, BSG squeeze, the BSG squeeze would be against that price there. There's your BSG squeeze. Now, why do we go through this process if we're looking to see whether we could have got that sell in place? Because you've got to know who's in the market and who's doing business at certain points. When the market breaks through this top edge here, the trend is technically changing into a buy trend. It changes into a buy trend. So when we see that it's changed into a buy trend, we obviously can start to say, okay, well, if the market's now changed into a buy trend, it's not really changed into a buy trend. Because at this stage, what's the low price? Is it this fractal low? Is it this fractal low? Is it this fractal low? Or is it the very, very bottom edge? Well, the truth of the answer is, if you're doing it right, it's actually all the way to the bottom edge, because that's changed the trend just there. This is the bottom edge here for the time being. That's the only one that has any objectivity, is the bottom edge. For it to be really in a buy trend, there now has to be buyers at higher prices now that the buy trend is established. So that break there is technically the buy trend. Would you agree with that? This is more like a test of a top edge. This is more like a test of the dealer's range. So that break there is really the buy trend. If that's the buy trend, the trend changes if the dealer's markup gets taken out here. So that's where we put the dealer's markup there. What happens? Well, we take out the top edge. So that's now the trade there. We see the price coming down. Now, bearing in mind that this is my sell trade coming into the cash open, so I use that to sell into. Now, you might be saying, you sold into a buy structure. This is a 30-second chart, guys. Now, let's just drop back down a frame for a second here. Let's drop back down for a frame. Let's take it up to the whatever chart, the 5-minute charts first of all. If I take it up to the 5-minute charts, we can start to understand a little bit more about the actual structure. This top edge is still a sell structure because of what reason? We broke the bottom edges here. But it's not necessarily just a sell. Why? Because obviously if we go backwards in structure, this was obviously the swing high at this point. This was the swing high because we'd taken out this price. And because we'd taken out that price, we obviously know that the bottom of the structure actually at that stage was here. That's not the bottom of the structure, idiot. The bottom of the structure was here. So there's the actual bottom of the structure, yes or no. In other words, on a 5-minute chart, this market is actually bullish unless the price breaks out the bottom of that price, yes or no. Yeah, it's still actually bullish. So when the price trades this area here, that's where your the best bullish opportunity is going to be located. Because obviously if we go through this, that break higher, that swing higher, didn't happen until we'd taken out this price here, correct? Until we'd taken out that price, the swing higher didn't happen. It's not from this price. It's from this price. Now you might be saying, but why would that price be important? And you can go backwards and you can find out why that price is important. But if that's where the price breaks out there, the low of the bracket that's formed there is the buy trend narrative. So in terms of trend trading, this is the high price. This is the low price. And that is your buy bracket. Yes or no? Yep. So if that's your buy bracket, is this a possible buy trend reversal here? It's still a buy reversal. It's still a buy trend. Is that your possible buy reversal? Yes, it is. Everything else in between is basically noise. Now, obviously, inside that noise, I can start recognizing other elements. I can start recognizing some really key important ingredients when we drill down into the 1s or the 5s or the 30 seconds or whatever. But you might be saying, but what makes this an important price against this here? Well, obviously, we have to go back another time frame to find this out, right? And this is what I'm saying. You've got to start somewhere, guys, because you might end up going back and back and back. You'll end up in 1928 by the time you finish going backwards, right? The high of the day or the high of the sequence was here. The high of the London session was here. And you might be saying, but if I know that that's a high, I've got to go back and know when the last buy get taken out. Yes, you could, but you've got to start somewhere, guys, okay? Accept it's a high and move on. There's a high. There's a swing low that's had a reasonable amount of business there. That's the bracket that we're using. The market closes below here. The trend has now started, okay? So when that big down candle here at 840 closes, that is the trend. At that point, we are in a sell trend. Okay, so there's now the low of the bracket, and this is the high of the bracket. That hasn't changed, right? That's the bracket right there. Now you're trying to be selling. Somewhere in this area, there will be sellable opportunities. Somewhere in here, there will be sellable opportunities. There was a half-back sell, perhaps. There was a tipping point sell, perhaps, as we came into this area. And then there was a BSG sell, perhaps, as we went through that phase. But there would have been sells. And when the price breaks the low, what happens? Well, that was a bracket low. We've now broken the bracket low, so we have to use the bracket high that was involved in that trade. There is the sell bracket there, yes? So that's a price we must make a mention of, understand? This is a really interesting, relevant price because this is what creates toxic order flow. This is what creates toxic order flow, yes or no, guys? So you might be arguing, but wait a second. There was actually a trend reversal earlier. Yes, there was. It doesn't mean that this level is any less important, but there was a trend reversal because obviously after this low got put in here, and then we broke lower than that price, then of course that sell that created that break lower becomes the trend reversal point right there, yes? So there's your trend reversal right there. But if that's your trend reversal, the only low that's really that important in that trend reversal is obviously this price here. So when we get that trend reversal there, we can see that a trend reversal isn't necessarily a bullish trend. A trend reversal is perhaps a tested bracket high. That's why we add in things like value and Wyckoff to try and figure out whether this is indeed a trend reversal. The trend reversal really comes from the break above that price. But let's not muck about with the neutral phase. We'll just do trend reversals. It's either in a buy trend or a sell trend, which isn't technically 100% true, is it? So then when we get the pullback, of course, we go back into our Wyckoff studies to try and figure out what this pullback means. We can see that there is a big spike in volume, a low volume test there. We're in a buy trend. We want to be in that low volume test. And obviously the takeaway from that low volume test becomes a possible brilliant tipping point trade as it breaks here and then a BSG squeeze as it breaks here. So there would have been a brilliant tipping point trade there and a brilliant BSG squeeze there. Do you see how easy it is to get these trades on the books? Yep, the break back above the structure to the upside. But the bottom edge is still the buy level. That's where the structure ultimately came from, isn't it? So what we're basically saying is that this has now been rejected as a trade. This area here at the bottom edges is now rejected as a price for sellers. Because if it wasn't rejected for price for the sellers, Theo, they would have sold this pullback, wouldn't they? They wouldn't have let it break higher. So they've basically rejected the bottom edge prices. And that becomes what we know as what? What does that become? A commercial buy zone, because it's a level, what? A level 2, right? The rejection of a bottom edge like this is what creates that commercial buy zone area. And obviously they marked up the price from here, so this becomes your commercial buy zone. A level 2 is a level 1 that's been rejected at a bottom edge, and it's also been accepted at the top edge. A commercial sell zone is a level 2 that's been a level 1 that's been rejected at the top edge to become a level 2, and it's also had selling at the bottom edge to break structure, which creates the commercial seller at the top edge. Yes or no? Is that clear? So this becomes a commercial sell zone here. Sorry, a commercial buy. This becomes a commercial buy zone here. And obviously that's where we're going to be thinking about the marking off on the charts. And obviously the takeaway from that is beautiful. We get a brilliant ride north. And obviously on the cash open, it's exactly the price we come into, interestingly enough, for that commercial buy zone to stick beautifully. Do you see how structures can help us really, really well with this? See how structures really help us with this storyline as we evolve? It gives us crazy good levels. It gives us some crazy good ideas. And when we add value and volume to this, obviously, structure just stops becoming a standalone. And we can do this, by the way, guys, not necessarily just in the 5-minute chart. We can do this on whatever time frame of reference we like. If we want to do it on a 5-second chart, you can do it on a 5-second chart to find these structures and volume. Your outcomes are going to be 5-second outcomes. Do you care? Are you bothered? Not really. Let's take a look at the value structure as you go. You might be able to start recognizing the top edge formed. Do you see what happened into the bottom edge for the value structure to change? Look at the blue line rising. You see it? Purple line rising. Orange line rising. Red line rising. Bottom edge buy trade. And look at the top edge. Purple line dropping. Blue line dropping. Orange line starting to drop. Structural highs at the top edge of the S&P. Structural highs at the top edge of the S&P. So let's really get down, now that we know that there's a value sell up here, let's get down into the nitty-gritty of how the hell that sell evolved. Let's take it step by step. Anybody up for that? If you're in a trade, guys, you've obviously lost this, and this is down ticking, so I'd be booking some of your monies just now, guys. I'd be booking some of your monies here during this phase here, because that purple line is now dropping, which suggests there's a bit of a floor coming in. Ceilings don't drop until floors are starting to show up. So when the ceiling starts to drop like this, this is usually because they're anticipating the price rising. And obviously because of that, you start using that lower low to close out some of your positions here. Yes? It's kind of straightforward. Okay. So let's get into the idea of this structure. When this becomes a level 2 commercial buy, which it already was anyway, this is now on a 15-second chart. When that becomes a level 2 buy, on a very, very small micro chart, would you all agree it also becomes a level 2 buy at that stage there? We've taken out that structural high. That structural high was in because the previous low was taken out and closed below here, so that became a structural high level, yes? On a 15-second chart, that's the change of trend line right there. So if that's a change of trend line, we've just gone bullish. So where's your buy trades? Your buy trade would be a low volume test of that story. Do you get a low volume test? Yes, you do. Is that a possible buy trade? Yes, it is. If you're getting a low volume drop, the best way to trade a low volume drop is to wait for the reversal and then deal. You're not going to see a lean on a block, so you don't necessarily have a block lean to lean against. You don't necessarily have a big Voltic to lean against, so there's nothing on a higher volume candle that you'd be able to lean against inside the candle. So just use the candle reversal at that stage. It's going to be an okay trade. And obviously that gets you into a reasonable trade, and you pop the top edge and you make some monies. Do we get a close above here? Not really. It sticks and it sticks and it sticks and it sticks. But the volume dropping on the way down is good news. What's bad news is the volume was also dropping on the way down initially, but then we got the drop in volume here. Still good news. We're still looking to buy into this, and obviously because the volume's dropping, if we get a candle reversal, we can still go into that trade. So we kind of get a little candle reversal in here, and you can still go for the squeeze, and again you still make some scalp monies in that squeeze trade. The volume fortunately increased on the uptick right there, didn't it? 1444, 45 seconds. Still increased in volume, so that's great news. A drop in sell volume, an increase in buy volume, great news. Increase in sell volume, but dropping. Well, it's your profit taking, isn't it? That's what you did. You took profit, so there's going to be an increase in volume. The fact that the volume drops, that's what's important. So again, we know that the volume dropping is going to be another possible spring trade. So there's another spring trade, or another tipping point trade rather, just in there. Now we would buy the spring trade, but the spring trade will have an increase in volume. Because the spring trade's got an increase in volume, we need to have a lean to lean against. We need to see some Voltics kicking off. So now we've got the break higher and we get a close above. Everybody happy that we now get a close above? Absolutely. So where is the trend change? Well, technically the trend change is now this price. A little bit higher, because that's the lowest low prior to the close above. There's the trend change just there. Now what happens? Well, we obviously explode past this price here, right there. We make an absolute fortune on the bid all the way through towards top edges. Because that price closed above, the trend change actually moves up into this area here. It's the lowest low prior to the break. There's your new trend change. It's not this price, it's this price. Okay? So when the price breaks and then turns and then breaks again, now it's this price here. Now we move up to this price. When the price sells off and turns back up, the trend break is now this price? No, it's not that price, is it? Because for it to be that price, we've got to make a new higher high. It's still this price. It stays here in terms of trend. Now, some might argue, but what about this drop here? But it's not really a drop, it's really just a profit take. When the selling comes in, yes, it denotes a new high price, of course it does. And obviously what happens is, it denotes a new high price, and what we're looking to do is try and get a close back above that price. Now, obviously this becomes what looks like now a dealer's range here. It starts to become what looks like a dealer's range. Now, remember what we said. Into the top edge retest at 1452, one of the ideas that we started to see was that we were starting to see some real money value in here to sell into this marketplace. We started to see that cycle reversing out. So at 1452, we started to look for that value sell. Well, this is where we are in the charts here. So let's try and read the Wyckoff elements to this. First of all, we start comparing the volume that broke here. Now, the interesting thing about the volume is that the volume has not increased at any stage during that period. Do you see that? The volume is significantly less. Now, there's challenges to that narrative because the volume is also not really showing on the downtick either. The first time we really see the volume showing up as offers, more comes in this area here. So this is the first sign that you're now seeing sellers at lower prices. Now, why did you get a very, very large volume there? Because you've taken out that little level 2 liquidity just there. Now, according to value, this is now a sell. And according to volume, this is probably now a sell. Why is this probably now a sell in terms of volume? Because we can now say that as a statement, can't we? The volume is lower on upticks, as it was during this rally phase, and the volume's just increased on a downtick here, okay? So now we can start to recognize that according to Wyckoff, this market is now a sell. So this market's now a sell according to Wyckoff. This market was a sell up here according to value. So we've got 2 of our 3 pieces of the jigsaw puzzle in place, haven't we? Would you agree with that? We've got 2 or 3 pieces of the jigsaw puzzle in place. Now, obviously, technically, we're not really able to get into a trending short until we break 32s. But if we've got 2 of the 3 pieces, this is when you could obviously go down another time frame. So obviously what you would maybe do is, in this case, we're on a 15-second chart as it is. It's going to be difficult to go down necessarily to a 5-second, but you can do it. And obviously what happens is that we simply come down to the structural low here. And then we come down to the structural low, look at the volume increasing. See it? You see the big volume increase here? So if you don't want to miss out on that trade, obviously you have to find a way into that as a squeeze, as a BSG squeeze. The drop in volume, the increase in volume, sell side trade. Now obviously what happens next is we get that breaker. So you're not missing out on an awful lot. But in terms of this structural chart, you can see obviously that big volume increase there. We're not really seeing much volume during that phase. We're simply selling on these reversal trades, coming away from that structural level. Now obviously if you'd sold the pullback here because of the decline in sell volumes, that's a perfectly good excuse to sell for a tipping point trade. So your tipping point would have been there. That's where your sell would have been actually the easiest sell to get into there. And you can see what happened, guys. We got a brilliant sell-off right through that phase. Structure. You understand? Now, when did it become a structural buy? When did it become a structural buy on this low time frame? Well, when we see a reasonable pop here, you might argue that it's not enough, but I like to see the size of the candlestick and etc., etc. But if you counted that as a big volume reversal there, and then it turns back down and it closes below, the actual structural reversal came in here. That's when the market changed from a bullish market, a bearish market, to a bullish market there. And obviously that meant that your structure low was now here. So anything from this point onwards, becomes what? A buy trade. Anything in here becomes a possible buy trade. Yes? Potentially anything in there becomes a buy trade. And obviously what happens? You get what is a retest. What happened to the retest in terms of volumes? Volumes increased. Can you buy the retest, guys? Yes or no? Can you buy that increase in volumes? Well, it's risky, isn't it? So if you're not going to buy the increase in volumes, what could you do? You could buy what's called a test, which takes place right there. Wait for the test. You don't know it's going to be a test until it stops and until it reverses, right? So you're going to buy that test candle once you've seen it failing. So the test for supply has failed. They haven't found any supply. So there's your possible safe buy trade right there. And now obviously the objective is that you're going to take out this price area here. When you take out this price area here, what happens to the bottom edge of the bracket? It moves to this place here. Now, there are other levels on this chart, by the way, guys. There's obviously the bottom of the bracket, but also there's the area that I like would be this trade here. When I see that big volume reversal there, that gives me a level, and obviously the takeout of the top edge is also another level you're going to pay very close attention to. The challenge with this price here is obviously everybody knows about it. Everybody knows about that price. So that's why you've got to be careful if you're trading around these breakout levels like this. When you get that trade there and it turns back round again, you can see that this is another low volume test on this very high volume candle here. That is never going to be a buy trade. But this low volume test is, but where does it become a test? Only when you know it's a test. When do you know it's a test? When it turns back up again, right? So that volume is locked in. You now know it's a test. So you don't know it's a test until it turns back up. And then obviously you're going for the BSG squeeze, which is an even better BSG squeeze. For what reason? Because it's now a paycheck liquidity at the top edge. And there's your next trade. And what happens? We get a nice runner. Price pulls back. Is this your new level? No. Is it a possible buy trade? Sure, because where would the buy trade not be a buy trade? Well, unless we drop below that price at 39.10s, it's always a buy trade. 39.10s, it's always a buy trade. Unless it goes below that price, it's always a buy trade. Does that change? Well, yes, it does, because what happens is we break the high here. We break the high here and we close above here. So what does that do? Well, that brings the area to this price here. Yes? So now this is our dealer's bracket here. This is now our dealer's bracket range here. You agree with that? Still a buy trade, but this is now our dealer's bracket range. So what are you watching for here? A buy opportunity. You're watching for a buy opportunity. You're probably thinking it may well be a spring. We'll have to wait to see if that's what happens. So where's your buy opportunity here? A big increase in volume, is that it? No. A decrease in volume? Yes. So when we get the decrease in volume here, because it's a decrease in volume, what are you going to be looking for? Well, you don't know it's a decrease in volume until you buy back against that reversal. You buy back against that reversal, and that's your buy trade right there. If it was higher volume, you could obviously wait for the spring, get the higher volume, get the lean. It's more dangerous, but you're going to get a better price. By waiting, more dangerous, but you're going to get a better price. By waiting for this trade to show that it's definitely a low volume test, you need to wait for it to reverse out of that area. You can still use POCs, you can still use the biggest volume candle of that area, but you've got to be aware that, you know, it's going to be something. I mean, the price actually was, the biggest volume in the down phase was at a price of what? 23. So the buy would have been 23 and a quarter. So you're not getting the high of the candle, guys. 23 and a quarter would probably get you your buy trade there. Everybody see that? 23 quarter, 23 half? Probably was your buy trade entry against the POC of that red candle just there. So we can obviously understand that. Now, if you wanted to wait for the biggest volume, you'd have probably bought 25 quarters. You'd have probably bought 25 quarters. And then obviously we get a new high. So when we get a new high, does it change where the buy trend is? No, it's still exactly the same price because the low was exactly the same price. The dealer's bracket is now this bracket here. That is your new dealer's bracket. The other levels we pay attention to is this level and this level. So there's the dealer's bracket with the other levels that we're interested there. That's the current structure. It's a buy trade, and it's only a buy trade at the moment, unless it takes out 22 or unless it takes out 37 halves. So it's only a buy trade in terms of structure. Now, what are you starting to notice? What you're starting to notice is that huge volume candle, just like this huge volume candle, jammed the price. You see it? This huge volume candle jammed the price. So this huge volume candle didn't, and this huge volume candle did, or this increase in volume didn't. So this is a sign of strength, this is a sign of strength, this is a sign of weakness. So we start to see that sign of weakness candle coming in there, and if you were long, a sign of weakness should be a what? A profit take. A sign of strength should not be a profit take, it should be a hold. A sign of weakness should be a profit take. Why is it a sign of weakness? Well, number one, you might say, but you didn't know that that candle was going to drop next. Yeah, but you saw that there was a smaller value candle. The candle was a lot smaller with a lot bigger volumes. If the candle's a lot smaller, but the volume's a lot bigger, that's absorption. Absorption is a possible sign of weakness. So obviously you start to recognize the possibility that there's a sign of weakness here. Now obviously, as you can see in the background here, you can see actually that the floor dropped back out of this bottom edge here, and it came in line with this perfect storyline forming in terms of a sell side narrative up here anyway. So the value was short. The value was short, so you're already starting to think to yourself, wow, that value is actually really short, so I want to be in that short trade. Based on that storyline, you then see the sign of weakness in terms of that jamming price. There's going to be a lean that you can get on that candle because of high volume, small candle usually has a beautiful lean. And obviously that S&P lean actually came in around about what price? 35? So probably 34.75, 34 halves for a sell trade, guys. 34.75, 34 halves for a sell trade. So there's your sell trade opportunity against the POC of that candle right there. And there's your possible sell. The volume at the bottom edge, the declining volume on the upticks, that's a low volume test. So as soon as that low volume test reverses back out, you should be trying to get into a sell for the squeeze. And then obviously that's very, very close to the bottom edge, so I wouldn't imagine that there's a BSG opportunity. But it doesn't change the structure at this stage. The structure is still bullish, right? The value might be bearish, the volume might be bearish, but the structure actually is still bullish. We haven't got all three elements in line. As the price drops, what happens to the volumes? As the price drops, the volume drops. Sign of strength. Because there's no supply down here. There's no sellers. There might be sellers at top edges, but there's no sellers at bottom edges. We can see that this volume dropped through that phase there, and then the low volume retests through that phase there. Gives you an idea that coming into this buy level, there isn't an opportunity to trade. So obviously in line with that, you would obviously be sign of weakness coming down into this level, a sign of strength, sorry, coming down into this level. You want to close out your trades here. You want to close out your trades. Make sense? You want to close out that deal. Is it good enough to buy into? Well, you should be buying into it if you're trading pure structure, because the buy is still valid until 39.23 gets taken out, guys. It's still a valid trade until then. Doesn't matter what else happens in between. Unless you trade below 23s, this market is still bullish in terms of market structure. Doesn't matter how many springs or whatever else happens, it's still bullish. Now, interestingly enough, the buys increased at the high price. So obviously when the volume sell starts dropping off again, you start saying to yourself, okay, I like this. I think a little tipping point trade and a BSG squeeze might just be the ticket here. And that's up to you to then say, right, we're still excited about the possibility of this trade narrative. And obviously as the price drops, you're simply waiting. You can see that the volume is starting to increase on the drop. So that would obviously be a possible lean type trade. And if you took that lean trade, there was a block trade just took place there at 30.5, got you into a buy trade at 30.5, 13.75. So 30.5, 13.75 was a buy trade opportunity against a lean there. If you took that buy trade, you're obviously hoping now to squeeze that price there, and your target price is obviously the projection, as you should do, to the top edge. Now, what's happening at the moment? The volume is still declining after a big volume down candle. So at the moment, you're a little bit worried about the lack of demand at higher prices. What should you do? Stops at break even quickly, just in case this does not develop. So you're not going to lose any money if you fail to make higher prices. The drop in volume is exceptionally worrying. You can already see that drop in volume compared to the sell volume that came in that spinner candle. So this is a worrying trade for a buy, isn't it? A worrying trade for a buy. Remember, this is structurally a buy trade. Volume, it's also a buy trade at that stage. But value, you can see quite clearly, is a sell trade by a country mile. The value you can see is absolutely rock solid on the short side. Rock solid on the short side, yeah? So you can see that low volume retest here, that low volume retest, if you look at your volumes, you can see that those uptick candles on a 30-second chart are very definitely low volume retests of that sign of weakness on that stumpy little candle in the background. And you can see just how obvious that trade is there for a possible value short trade. Now, remember, your time frame of reference is what's important. Mike's mentioning the higher time frame. If you want to trade this on a 30-second chart, you are a scalper, right? If you want to do your structure and your volume and your value on a 30-second chart or a 15-second chart or even a 1-minute chart, you are a scalper. Your value, your targets, your stops should all be based on the kind of size of trade that you're taking here. But obviously in line with that, if you want to take a trade on the bigger charts, now I know this is a 15-second chart here, but we're still using that idea that we should only be buying. The volume pop, the drop in volumes, the increase in volumes just there is usually my favorite buy trigger for these things. So there's a perfect buy opportunity to stick with structural longs. Stick with structural longs here. Now, it doesn't mean you're trading in contra to the value line. Because if I sold because of value and I've just bought because of structure, well, obviously I've sold because of value. And if I've just bought because of structure, that's an exit then, isn't it? So we can use these combined when they offset each other. It's not confusing. You just wait, preferably for them all to line up, and then it becomes sensational. Also, what happened? We got another value sell. You can see there's a very big value sell back into the highs, yes? A very big value sell. It was on an increase in volume, so you've got to make sure you get a what? You want to make sure you get a lean. Absolutely make sure you get a lean. Is that contra to structure? No, it's all part of it, guys. So when we see that volume sell, you can see what happened. The drop off in volume, the increase in volume, and then we get this as what is obviously what we call a sign of weakness. We only know it's a sign of weakness because the volume sold off behind it. Okay, so there was a lean sell into that there. Now structurally, this is still a buy market, right? Structurally, this is still a buy market. We haven't taken out the bracket highs and we haven't taken out the bracket lows. This is still a dealer's market just now, right? Do you understand that concept? It's still a dealer's market. It hasn't changed structure. So in other words, there will always be buyers at the low price. There will always be dealers selling at the high price. Structurally, that's going to be a possible buy trade. Value, I love the sell, but we know that commercials work value over a period of time. You understand? So where would the commercial love to get the trade to? Well, the commercial would love to get the trade into this paycheck top edge, wouldn't it? The commercial would love to get the trade up here. But obviously to get the trade up there, we need to find buyers paying higher prices. This looked like a good opportunity here, but yeah, it failed. That's why the buys have always been at lower prices subsequent to that. Does that make sense, guys? Is that very, very, very obvious? Structural value narratives, stories. So we're obviously, this big liquidity is starting to pull that price up. Structural, still buy side structure. Why is the structure important to us? Because for the commercials to be finished the accumulation, for the commercials to be finished this accumulation, they would have sold below the bottom edges. They didn't sell below the bottom edges. So because of that, we know that they haven't done any accumulation structures at this point. They haven't sold at bottom edges, and therefore the market is still bullish. Perfect. We've just squeezed the market higher, guys. We've just squeezed the market higher. What's the value in this? Well, the value is still sell side, isn't it? The value is still sell side. We can see huge value in this trade still on the short side of this market. and obviously now the commercials have got what they wanted. They got the higher price that they wanted. I'd imagine the commercials will be delighted with that outcome. Delighted with that outcome. And obviously that you can see that that's huge volume candle, and obviously the price gets jammed on that, so there's a possible sign of weakness right there. But that needs tested because it is huge volume. It needs tested. The drop in volume on a downtick is not good enough. We would have preferred to see an increase in volume on a downtick. The increase in volume on the uptick would be worrying. The good news from the seller's point of view is we had a decrease in volume on the uptick, which gave you a chance to perhaps sell that as a test candle. Perhaps sell it as a test candle. Now, does this level here change? Yes or no? No, stays the same level. Stays the same level. Because that higher high, this is the lowest low after we broke that higher high, right? It's the same price level. It hasn't changed. If anything, yes, it dropped down a few ticks here because it gave us a pin rejection low. But there's the new dealer's level at the moment. You all agree that that's the dealer's level? That's the dealer's level on a 15-second chart, of course. Dealer's level on a 5-minute chart is going to be slightly different. That's why doing multiple time frames can give us some interesting references. The market is still bullish only from a structural point of view. There is no sell. From a structural point of view, a close above here would give us a new structural level, which might be really interesting because that's going to bring the dealer's level right up. We've pin rejected it, guys. We've pin rejected it, but a good solid green candle in here will bring the dealer's level to this price here now. Is that a useful price to be able to have? Sure. You all agree that that's the new dealer's level? Now, why is this useful? Why is this process useful? Well, we can think about it from an options perspective. You know, it's saying, what are we getting into options here for? Not because of the value in options, but because of the way options deal. The vast majority of options trade at the money, yes or no? Well, the answer is yes. We don't have to prove that point. It's already been proven many times. So the idea of the vast majority of options trading at the money is that in a buy trend, we never really start establishing new value areas for the dealers to work with. But as price starts stabilizing, all the options are now dealing in this area, right? And because the price is now stabilizing around that point, if all the options are at the money, which is going to be somewhere perhaps in here on average, then of course the dealer's gamma really becomes worrisome if we break below here, or potentially if we break above here. So that rise in the dealer's range is a very, very, very powerful piece of information. So when the dealer's range rises, we know that the breakout of the new dealer's range becomes very, very, very important to us as traders. Comprendi? Make a lot of sense? Hope it does, guys. I know that we've got right into a classroom there, but it was kind of important we get this because it's a long subject and we're obviously going to do it from 4 o'clock anyway. So we'll leave you guys to get on with your